legit. Anything you
Warren Buffett, Bitcoin is a delusion that attracts charlatans. Berkshire Hathaway CEO Warren Buffett defined Bitcoin, BTC, as a delusion and said that it attracts charlatans, according to an interview with CNBC published on February 25. Buffett, a known Bitcoin critic, has previously said that buying Bitcoin as an investment is a gamble, and that no one knows exactly what the top cryptocurrency is. When asked if he changed his mind concerning Bitcoin in the CNBC interview, Buffett answered saying that he did not, and that it is a delusion, basically. During the conversation, he also pointed out that Bitcoin has no unique value at all, since blockchain does not depend on Bitcoin and it does not produce anything. Buffett further explained, "You can stare at it all day, and no little Bitcoins come out or anything like that. It's a delusion, basically." However, Buffett did add, "Who knows where we will be next year," followed by comments on his empathy for people who thought investing in Bitcoin was going to change their lives. As Cointelegraph reported in May of last year, Buffett also said at the annual meeting of his company, Berkshire Hathaway, that cryptocurrencies will come to a bad ending, claiming infamously that Bitcoin is probably rat poison squared. Berkshire Hathaway Vice Chairman Charlie Munger has also weighed in on Bitcoin, commenting on Buffett's criticism to crypto with his own negative opinion of the crypto market. "Someone else is trading turds and you decide I can't be left out." In October 2018, Berkshire Hathaway invested around $600 million in two fintech payment firms focused on emerging markets. Last year, a self-proclaimed disciple of both Buffett and Munger, Chamath Palihapitiya, noted he believed that the two skeptics were wrong about the leading crypto, stating that technology is not in Buffett's circle of competence.
Blockchain investor claims Bitcoin BTC will plunge to $0. Economists bash Bitcoin in the Swiss Alps. Bashing Bitcoin BTC has apparently become a popular trend at Davos' recent World Economic Forum event. More specifically, the cryptocurrency has become a punching bag. Just yesterday, per previous reports from Ethereum World News, Hovhan Steenis, the senior advisor to Bank of England's Governor, Mark Carney, bashed this nascent asset class. Speaking to Bloomberg in a candid interview, Steenis, who purportedly is compiling a report about the future of finance, surprisingly claimed that cryptocurrencies, like Bitcoin, weren't on his radar, or list of concerns for that matter. The former Morgan Stanley economist then remarked that blockchain-based assets fail the basic tests that financial services are de facto run through. Steenis explained that BTC, along with other digital assets, is slow, fail to hold their value over time, and aren't a viable, bona fide medium of exchange. Tech investor claims BTC will fall to $0 just one day later. BTC fell victim to another attack, as a technology investor and entrepreneur took to a CNBC-hosted panel to bash the blockchain-based digital asset. According to NBC Post-Mortem and The Manor, Jeff Schumacher, the founder of BCG Digital Ventures, a corporate investment and tech incubator group, claimed that the flagship cryptocurrency could capitulate to a value of zilch eventually. Speaking to a crowd of economists, global leaders, notable investors, and corporate C-suitors, Schumacher explained that he believes it will go to zero, adding that he thinks that it or the technology underlying Bitcoin is a REIT technology. However, the BCG founder made it clear that he doesn't think that blockchain technology should be applied to currencies, accentuating that its underlying value isn't based on anything. Like many traditionalists with a vested interest in the centralized system, Schumacher fails to see the value of a decentralized, immutable, cross-border, rapid, uncensorable current that transcends the boundaries imposed by financial incumbents. Instead of lauding blockchain technologies for their potential revolutionary use cases in finance, Schumacher instead touched on the innovation's ability to facilitate pan-decentralized ecosystems, which would be the global protocols and infrastructure that businesses could run on. Yet, some weren't in agreement with Schumacher's inflammatory quip. Glenn Hutchins, the chairman of Virtu-affiliated North Island, a financial technology services company, claimed that BTC will likely grow to have a notable role as a store of value. So Hutchins noted that BTC's role and the system could be as pseudo-gold in a digital economy, rife with arrays of tokens that serve every use case imaginable. Hutchins isn't the only notable investor to think of Bitcoin as a digital semblance of the orange-esque precious metal. As reported by Ethereum World News multiple times previously, a number of pundits have overtly claimed that BTC's foremost use case is as digital gold. Alistair Milne, the CIO of Digital Currency Fund, claimed that Bitcoin has seen its store of value SOV proposition become more apparent. More specifically, he noted that Bitcoin's investors are now aware that BTC is like trading gold with 100x leverage, along with the fact that the flagship cryptocurrency's inflation rate will be lower than that of the precious metal. And, as one appears to doubt the usefulness of gold, the Inclavos wins, the co-founders of the Gemini exchange, recently lamed hat Bitcoin Ether at being gold than gold itself. Twin Tyler noted that as this industry continues to develop, BTC will continue eating up bits of gold's market capitalization, until the newfangled cryptocurrency passes its arguably worse physical counterpart. Lou Kerner has also recently chimed in on the matter. Kerner, the founding partner at Crypto Oracle, divulged that the cryptocurrency's portability, ease of use, divisibility, and scarcity make it a viable alternative to precious metals, and will allow BTC to eventually surmount its quintuple-digit sell